Hey traders, this is Mike Sir. Welcome to our third module together. Now today we're going to talk about a very important topic called risk management. Now risk management is extremely important because it doesn't matter what trading strategies that you use or what stocks that you trade. If you don't adhere to proper risk management in your trading, you're likely to lose systematically in the stock market over time. Now, in fact, one of the most successful investors in the world, Warren Buffett, has two investment rules that he follows religiously. His rule number one is do not lose money. His second rule is do not forget rule number one. Now, you see, Warren Buffett's investment goal is actually not to lose money. And once he achieves that, this allows him to generate profits on his investments. Now, it just shows you how important managing and minimizing risk is in making money. Now, when trading pairs, the biggest trading risk is the price gaps. So you're probably asking, well, what are these gaps in trading? Well, a gap in stocks occurs when a stock opens up at a different price than the one that it closed at the previous day. Now, a stock could open up higher or lower than the previous day, thus creating this called price gap. Now, you can see on the chart here that the stock price jumps higher between the close of one candle and the opening of the next candle. So you're probably asking, well, what's the reason why gaps occur? Now, generally, it's due to the release of important company news or earnings reports that investors and traders react positively or negatively to. The biggest risk to price gaps is it could lead to unplanned losses. Now, usually in these cases, prices can overshoot pre-planned levels and positions are closed at prices that are unfavorable for us. As well, price gaps can affect our trading strategies because the price spread of the pair changes and stationarity is violated. Now, the connection between the stock pairs is disrupted as well as the correlation and the co-integration of the pair is disrupted. Now, therefore, when choosing pairs, you need to pay attention to this and analyze, well, how often do these stocks experience such gaps? And perhaps you want to avoid trading stocks that gap up or down, quite often. However, in future modules, I'll explain to you how you can actually use these price gaps to your advantage to trade specific stock pairs. Now here you can see a chart of and a clear example of a gap. Now you can see on the chart that the price on the 17th at the opening of the trading session was below the red line, which is the stop loss, and the position was closed. Now unfortunately the stop loss was lower than the planned one and therefore led to a bigger loss for the trader. Now, as I mentioned earlier, stocks can gap up or down due to important news catalysts or simply move in a volatile manner. So therefore, it suggests that you do not enter the pair if there are any company earnings as well as company-specific news announcements, such as maybe the company's announcing like a new product or a new service, or there's any changes in their company management, or just any other important company news. Also, be aware of any major economic data reports that come out, such as the US employment report. Note down when that report is to be released. As well, every 6 weeks there is what's called a FOMC meeting announcement where there is a US interest rate decision. Also be aware of any stock analyst upgrades or downgrades of the stock pairs that you are trading. So if there's any important upcoming news announcements, put the pair on pause on the day of. Now, in 3 days after the news comes out, you can trade the pair. Now, to help you navigate upcoming events, we have included several functions in our platform. Now, as you can see in the lower corner, there are several circles in which there are letters N. Now, there are news flags, okay? Now, blue flags indicate ordinary news. Red indicates very important news, and the letter D indicates upcoming dividends, and the green letter E indicates upcoming company earnings report. Now, also, if you want to analyze the companies and check for news, there is the letter Y in the upper left-hand corner beside each stock. If you click on the Y, it basically directs you to the Yahoo Finance website. Now, let me share with you our risk management parameters. Now, one important aspect of risk management is position size, meaning the dollar value of each of your trade positions. The bought position size cannot be more than 10% of the total limit. Now, for example, for a $30,000 limit or $30,000 capital in your account, each bought position entry can't exceed $3,000. Now, the simple reason is we don't want you to put all or a lot of capital that's allocated to you into less than 10 positions. What we want you to do is to diversify your portfolio and open up as many positions so that you don't risk one or two losing positions to cause a big loss in your portfolio. Now, another key aspect of risk management is the placement of the stop loss level on your platform. Now, in the upper right-hand corner, you can see a window where you set the maximum stop loss value. Now, according to our risk management parameters, the stop loss size for beginners with $30,000 limits or $30,000 accounts should not be more than $35. Also, in the window below, you'll see is the stop loss level in standard deviations, where basically you can determine the maximum deviation of the pair from the center line. So the center line is basically where the standard deviation is calculated from. Now, in our case, this is 2.5 standard deviations. Now, all stops and deviations are calculated in advance by our algorithm, focusing on the amount that you manage. Now, in this particular case, it's $30,000, but you can also change all the average deviations manually. Now, the next window is the difference between open position bottom and take profit. Okay, and therefore the take profit should not be or should be more than one standard deviation. Again, this is for the beginners accounts with limits of $30,000. Also, if you uncheck the float take profit, you can see the possible profit per position. Now, the result should not be less than 70% of the stop loss size. So, for example, the stop loss size of $35 should have a possible profit of at least $24 or more. Now, let's look at the side ratio parameter. Now, this shows us how optimal the pair correlates and how accurate the form ratio of the number and the price of the shares selected by the algorithm is. Now, the optimal side ratio is 1, so aim to set the side ratio as close to 1.00 by manually adjusting the stop loss size. Now, continuing on with our focus on risk management is where I want to share with you our risk management rules. Now, as Warren Buffett and I mentioned, the number one rule is to focus on risk. It's do not lose money. Now, this means that you should cut your losing trades. So any trades that reach your stop loss amount, you will close the trade. However, if your loss exceeds the stop loss amount due to price gaps, you manually must exit the trade. You don't want to let your losses grow or become too big. Also, make sure that you determine any upcoming news catalysts, or earnings, and avoid trading the pair on the day of, and only trade it after 3 days after the news or earnings has come out. Now, if any abnormal price movements after hours after the regular market session, inform us about it and close the position. Also, at the end of the main session at 4 p.m. New York Standard Time or New York time, put the launch bots that have not entered a position in the pause mode in My Bots. Now, this way you can reassess whether the bot is still valid for the next day. As well, do not launch bots at the open of the main session at 9:30 a.m. New York time. What we want you to do is wait 15 to 20 minutes after before launching the bot. So it'll be around 9:45 to 9:50 a.m. New York time. Now this is because prices can fluctuate wildly at the start of trading. Lastly, do not hold overnight, meaning after the main session, any pairs related to pharmaceutical, cryptocurrencies, commodities, or highly volatile stocks, like for example, Tesla or Nvidia. The simple reason is that these stocks can be very volatile during the after-hour sessions in the stock market and could result in price gaps in the next morning. Also, you constantly have to test your bots to see how the bots are working, and one of the ways is to look at the success ratio. Now, this success ratio will show you how successful the pair that you have chosen is, as well as the results are based on the backtests that are carried out by the algorithms of our program. Now, generally, we look for a success ratio to be at least 0.50 or more, basically indicating that the bots are 50% or higher in terms of success. Now, preferably, we like to see a success ratio of 0.70, indicating a 70% success rate. As well, please pay attention to the ROI indicator, which is the return on investment, which is the profitability ratio of the pair. Try to look for a value of at least 1%, which will cover all your overnight commissions. Now, please note that along with risk management, you must know how to manage the capital that you're trading with, and this is what we call money management. Now, as mentioned, for beginners, you will start off with $30,000 of capital to trade with, and you must learn how to manage it effectively so you can generate the highest returns possible. Now, our suggestion is to try to load trading bot positions at more than 80% of the buying power, which is your total capital. Now, this means that your capital is being used efficiently. As well, monitor both active open positions, which are your active bots that are currently running, and passive open positions, which are the bots that are in the waiting phase and waiting to enter a trade position. Now, this way, if there are suddenly too many active running bot positions, which could exceed your buying power, you may want to cancel the passive bots that are waiting to enter. So one of the criteria for getting a live real account with us is to have at least 30 bots that are either actively running or waiting to enter at the same time. Now, this way, your portfolio is well diversified and not affected by one or two bad trades. Also, as I mentioned earlier, you should have more than 80% of your buying power in trading bot positions, so you are making a full use of the capital that is given to you. Now, there's a famous quote from the Chinese military general Sun Tzu that I'd like to share with you. Now, he basically says, his quote, "Every battle is won before it is fought." Now, if we refer to that quote in regards to trading, this means that you must be fully prepared before you put on a trade. Now, it's important to start your own diary of trades in Excel and document starting from the first spot. This way you can analyze your own trades, understand what mistakes that you made, and to have your trading checked by our mentors. Now, sample diary that you can reference will also be provided to you by your mentor. As well, we mentioned this before, is that if there's any technical issue, maybe there's a bot malfunction or anomaly in the market data, please immediately write to the feedback module of Tidio. As well, our program contains a live chart column that will allow you to immediately contact our support team, where you can find out all the problems related to the program and trading in general. All right. Now that you've learned a lot about risk management, it's time to assimilate what you have heard and what you have seen. Now, for this module's homework that should be completed in 7 days, we would ask you to do the following. Number one, or the first thing is, use our program to filter through the pairs and then select 10 pairs to trade. Now, it could be different strategies for each pair. Then set the parameters and create 10 bots in Bot Builder in paper mode with the risk management parameters corresponding to a stop loss level of less than $35 and a possible profit per position of at least $24. Also, the side ratio should be between 0.97 and 1.03. So once it meets all these parameters, make sure to run the bots. And then send us a screenshot of your 10 active bots from the My Bots to my email, as well as send me a screenshot of your trades from trade history. And lastly, make your trading diary according to the sample that we gave you, upload it to Google Tables and send us a link to it. All right. Thank you for your attention, and I'll see you guys all in the next module.